Hey traders, welcome back. If you've ever felt lost reading order flow, you are not alone. The DOM, footprint charts, limit orders, market orders, it's a lot. But what if I told you there is a tool that makes it all simpler and gives you an instant read on buyers versus sellers strength? That tool is the Cumulative Volume Delta, or CVD. In this video, I'll show you what Cumulative Volume Delta is and how it works, how it simplifies order flow when paired with footprint charts, how to read a delta grid, and how to use it for spotting breakouts, reversals, and absorption. So if you're serious about trading with an edge, smash that like button and let's get started. All right, now before we get started, this information is for educational purposes only. I am not a financial advisor, and you should definitely trade at your own risk. All right, now let's start with the basics. What is Cumulative Volume Delta? CVD tracks the net difference between aggressive buyers and aggressive sellers. When market buys hit the ask, delta increases. Buyers are in control. When market sells hit the bid, delta decreases. Sellers are in control. If CVD is rising, buyers are winning. If CVD is falling, sellers are in control. But why is this important? Because it tells you who is actually controlling price action, beyond just candlestick movements. So why should you care? Especially if you're already using a footprint chart. Isn't that enough? Footprint chart shows where trades actually happen. CVD shows you who's actually in control. Combining CVD with the footprint chart makes order flow easier to read. For example, if price is moving up, but CVD is flat or declining, the move is weak, likely driven by passive orders. If price is moving up, but CVD is increasing, real buyers are stepping in, confirming strength. Now let's talk about, in my opinion, one of the best tools to visualize order flow, the delta grid. If you've been using standard CVD, this will take your analysis to the next level. The delta grid provides a more detailed breakdown of volume and delta per candle. It includes the bar volume, total number of contracts traded in that candlestick, delta, net difference between aggressive buyers and sellers, bid volume, number of contracts that sold into the bid, ask volume, number of contracts that bought at the ask, cumulative delta per candle, how much the net delta changed within that bar, high and low delta, the highest and lowest that delta reached in that candle, delta percentage, shows if the candle was dominated by buyers or sellers in percentage terms. This is powerful because it gives you more context beyond a standard CVD. Instead of just seeing delta increasing, you can break down exactly where that buying or selling pressure is coming from. All right, now that you know what CVD and the delta grid is, let's go over how to actually use it in your trading. Spotting fake moves or divergence. If price makes a higher high, but delta or CVD is making a lower high, the move is weak. So this could be a potential short opportunity. Confirming strong breakouts. If price breaks out and delta plus the ask volume are high, it confirms real buying pressure. Expect continuation. Identifying absorption. If price stalls at a level, but delta is positive and bid volume is high, sellers are absorbing all buy pressure. A reversal is likely to happen. Now let's put it all together. Using CVD, footprint charts, and the delta grid together can give you the full picture. Footprint charts shows where orders are executed. CVD shows who's in control, buyers or sellers. The delta grid breaks down how much aggression is happening per candlestick. For example, if the footprint chart is showing aggressive buyers lifting the ask and CVD is increasing, and the delta grid shows strong ask volume, that's real buyer strength and a high probability of a breakout. If a footprint chart shows buyers lifting the ask, but CVD is flat and delta is weak, that is potentially a fake breakout and is likely to fail. All right, before we wrap up, here's some pro tips to maximize your delta grid and CVD analysis. Watch for delta divergences. Price and delta must agree for strong moves. Check the CVD for fakeouts. If price moves, but CVD doesn't, be cautious. Combine with footprint charts. Confirm smart money before entering trades. All right, traders, let's do a small recap. CVD tracks aggressive buyers versus sellers. The delta grid breaks down order flow candle by candle. Using it with footprint charts gives you the full market picture. All right, traders, now if this information helped you out, make sure to smash that like button, subscribe, and put down in the comments, do you use CVD in your trading and how do you use it? This is X Viper TV. Talk to you later.